All signs are showing we're headed for lower home prices. We have a record number of homes in the market right now, 11,300 freehold homes, and that is the highest amount we have seen in years. We did hit 11,204 homes about 2 weeks ago, and then the market kind of slowed down, and some homes came off the market, and now after the long weekend, we're seeing the inventory is starting to rise again. So we have a record number of homes in the market. We have a record number of condos in the market as well, with 8,600. We're seeing more terminated listings. Those are listings that people put on the market. They didn't get the offer, or they didn't get any offers on their home, and they decided we're not going to sell the home. So the listing was terminated. We're seeing a lot more expired listings. An expired listing is when it stays on the market for the contract period they have with their agent, and nothing, they might have a price change in between, but the listing expired and didn't sell. We're also seeing a lot more price changes. Now, price changes happen in two situations. They feel the home is priced too high, so they reduce the price and they put a lower price on it. Or there was multiple offers. They had a date, they had a lower price. They're hoping to get 3, 4, 5 offers on the home to take the price higher. They didn't get that, so they did a price change to put it at the price they actually wanted it to be. We're also seeing an increase on days on MLS. In this hot market we had about 2 years ago, or even up to the beginning of this year, a home would sell within 3 days. If you listed a house, you'd have an offer maybe in the first hour. It takes 3 days, 5 days, 7 days, 12 days, 14 days. That's a really hot market. Right now, we're anywhere from 20 to 25 days for the homes that are selling on average. That's how long it's taking. So we're seeing the trend that the market is slowing down. Buyers are taking their time, and they are kind of sitting on the sidelines. Also, we have lower sales. In September, we only sold 4,642 homes. And also we sold 1,307 condominiums. Now, if we're having less sales and more inventory coming onto the market, that we discussed just earlier in the video, 11,300 homes, detached homes, and 8,600 condominiums are on the market, and we're having less sales. So if we're getting more inventory and less sales, that's a clear sign prices will come down. Also, when the inventory keeps going up the way it is, the reason why we're seeing inventory rise the way this year than other years is because of the high rates. On average, people can hold off. If they renew their mortgage, they can hold off anywhere from 6 to 9 months of those higher rates. And we discussed in previous videos also, by the end of this year, 47% of the people with mortgages will have renewed into the higher rates. So we're seeing all these signs, all the pressure to push the home prices down, but we're not really seeing home prices come down the way a lot of buyers would like to see them. That's because it takes time. We're not going to have an overnight crash unless there's some kind of financial crisis in the marketplace, and that will lead to a fall in all markets. Besides that, homeowners are trying to hold on to their houses. They'll stop paying their car loans, they'll stop paying their credit cards, they're going to hold on to their homes. So as inventory rises in your neighborhood, how the price will change will be like this. A home will come up for sale in your house, and this homeowner has to sell. Now, if he sells, let's say $100,000 less than what you purchased it for, the new buyers that move into that area are going to kind of look at that most recent sale and say, hey, most recently a home of this value sold. Now, if another home sells in that similar value, so now there's 2 homes that sold for $100,000 less in your neighborhood, it's just a matter of time. Well, that's the price in the neighborhood now, because a third home will sell in that range, a fourth home, a fifth home. Just like that, when the prices went up, when we get a high sale in the area and the market was hot, that's the new price. And the next home will sell for that, and it'll just continue upwards, and we can see it continue downwards just like that. What we expect going into 2024 is we will have more inventory. October 25th, this month, we're having a decision on the rate hikes. I don't think they're going to be raising rates. They don't have enough reasons to do it right now, even though we had high job numbers September. I still think they're going to hold off. The only thing that can change that, next week, we have the CPI numbers coming out, the consumer price index is coming out. So inflation, if it's higher than they expected in August and September, especially September, because that's the last month, if the inflation is higher, that's going to put the Bank of Canada in a really bad position where they might have to raise rates. But I still am on the consensus that we will not get a rate hike in October. They're going to look at the data more. They're going to see where these rates go, and then they're going to make a decision if they're going to be raising rates in December. That'll be the last meeting of this year. Now, we did speak to some of our investor clients over the weekend, and we have one of our clients who has 4 properties. They're rented out, and 2 of them he's not getting any rent for them, and he hasn't been able to make mortgage payments on 3 of them. We're not disclosing any names here, but this is a situation I'm finding in a lot of places. If you're in a similar situation where you are trying to hold on to your home, but you feel you might not be able to, we don't see rates letting up anytime soon. I know I make a video like every week or 2 weeks saying the similar things, but I'm out there in the marketplace. And for the condo holders, I will tell you, in the core downtown, let's say from Bloor to the lake, and from west going Bathurst and to the DVP going east, that pocket, about 55% of the condos for sale there are either vacant or tenanted. So we've been showing our clients condominiums, and these a lot of them are either vacant or they have tenants in them and they're up for sale. So that's a lot of investors getting out of the market because either their mortgages are renewing or the mortgage has already happened, they can't afford the rate, or the renewal is coming, and they know based on the current rent they have, they're not going to be able to make the mortgage payment by breaking even anymore. They're going to have to put money out of their own pocket. So in the condominium market, we're seeing that quite a bit too. So if you have any questions, reach out to us anytime. It's Real Estate with Raza, 416-995-7317. And if you have any questions for your particular situation, we can have a private meeting. You can either text me or send me an email. It's on the link below, and we can get in touch that way too. You guys have yourself a wonderful day, and until next time, bye-bye.